So I'm gonna be honest with you for a second. I am a little bit scared making this video because I could potentially lose something about $1 million, give or take, with this new tax plan if it becomes enacted. So I want to go into why this is the case and what the key details are about this. And this is not for the wealthiest individuals. This is for like many investors that are probably watching the channel, such as yourselves. So let's get into everything. And there's reasons why the market is moving, and it's not going to affect just stocks, but also real estate, crypto, any kind of investments that you may be holding. And there's two schools of thought here. There's the one school of thought where, everybody's going to sell, and it creates a sell-off before these plans become enacted, if they actually do become enacted, because that's what people think, and they get scared, and the markets are scary, and everyone sells off, which that's not good. And then also on the other end, you got people that are for it because they think that investors won't be scared because they got to look at the long-term goals of this tax plan and why it's going to be ultimately good for everyone. So let's get into it. And before we do, I'm going to ask you one quick thing. Just smash the like button for me real quick. It'll take nothing, no time. Do that and subscribe if you feel like it, and hit the notification bell so you'll get notifications every time I post a new video. And if you're on Instagram, you might as well follow me on there because I post there pretty much daily. So check me out on there. And guys, stay to the end of this video so you can see how to get some free stocks and some free crypto from my links below. So stay till the end. And I'm going to put a disclaimer out there before we get into this video. I do not mind paying what my fair share of taxes will be. I've always thought growing up that the wealthy individuals of America should be paying maybe more than the average people who cannot, because they're afforded the great income of America and what it can provide, and they've been able to make a great living for themselves. And let's be honest, a lot of them are not slaving over making all the money. They just created great wealth for themselves, and it's because of all their, business ventures and developments they've made. So yeah, pay a little more. But here's the question. What is the fair share of a little more? And that's where we have to talk about. Okay, so I'm gonna read exactly word for word from this article in Investopedia because I don't wanna get it wrong, but it's gonna go over some figures. So in regards to paying taxes, the top 1%, ready, have paid a greater share of individual income taxes than the bottom 90% combined. And the top 1% of taxpayers also paid 26% average individual income tax rate, which is more than 6 times higher than the taxpayers in the bottom 50%. So yes, the top percentage payers, the top income earners are definitely paying a lot more taxes than the bottom half. So I didn't really know how much of a differentiation it is, but that is what the current, statistics show. Okay, so now let's get into the key takeaways of this tax plan. First, income tax. Now, this isn't that big of a deal. What Biden's they are basically arguing is that anything under 400,000, you're not even going to be affected, especially with the tax write-offs and the tax bonuses and benefits that you're able to get with having children, and it's going to be an increase in that it's not going to affect anything under 400,000, that's a great income. And if that doesn't, so basically there's no problem there. As far as anything over that, if you're anything over 518,000, I believe, or if you're 622,000, if you're filing jointly, then you're going to be increased from 37% to 39% or 39.6%, which is really, if you do the math on that, it's like $20,000. And let's be honest, if you're making that much money, $20,000 is not that much, at the end of the day. Now, if you are making over $1 million, I think that's filing either individually or jointly per household, that's going to be an extra bump of a percentage, and you're going to be about 43%. paying in, which is going to be an increase there. But in the grand scheme of things, it's not that much of a difference, and it's not that much of a change. So now for the second key takeaway is corporate tax changes. Now from the corporations, it's going to be an increase from 21% to 28%. This is a lot less still than the 35% between 1994 and 2017 that was charged. But, and I kind of agree with this. I don't, corporations that are making a lot of money, I don't really feel the problem with them paying more taxes like that. But the thing is, it depends on what kind of industry. I know, for example, owning a restaurant, it is very tight margins. And when you're working with that tight margins, there's kind of a argument to be made that if you're increasing the taxes on those kind of corporations, that's going to be just passed on to the consumer, which is the public, which are people going out to eat at these restaurants, to be able to make up for that difference. But this is where the main change comes in. And this is kind of geared towards more wealthy individuals. So the difference here is for long-term capital gains. Now, this is the big change. So they're proposing a difference, and long-term, let's quickly be clear on this. So short-term capital gains is, let's use an example of you buy $100 worth of a stock. Now it 10x's and it goes, and you're a thousandaire, and you got $1,000. Well, you don't pay taxes on all that thousand. You may your initial investment was the 100, so you pay taxes on the 900. Now, if you've held this less than 1 year, you pay taxes in a normal tax rate. So say, for instance, like 37% or so. In long-term capital gains, here's the difference maker. Long-term capital gains, say the same situation, you have $900 profit out of your $100 investment, and you're going to pay taxes, if you've held it over a year, of only about 20%. That's what's going to change. The proposal is that long-term capital gains is going to nearly double. What? To 39.6%. That's kind of crazy. I got to look into this a little more, but that's where this is creating the problem. See, now opponents of this tax plan are saying that it's going to spook the markets and it's going to make everybody sell off and get out before this is enacted. And proponents of this are saying that no, it's not going to spook the market, because it's most of the people that have bought through maybe like 401ks and bought their stocks through that are just going to be staying in it anyway, and they're in it for the long term, and it's going to be good for the economy and good for the US. So I'm not really sure how I stand yet, but I just know that with long-term capital gains, if that changes, and say for instance something like crypto, where you're becoming a crypto millionaire, and you got stuff in there, or even stocks that you've held over years, and you're looking at selling those, or if you need to sell those, you're going to get taxed at a double tax rate than you normally would. I don't necessarily agree with this, and I'm a little scared about this one, so I got to look into this a little more. But that's what the new proposal's saying. So long story short, I'm not really sure how I feel about this, but this is the new proposal tax plan. So leave me a comment below. Let me know what your thoughts are. And I got to know if you have a suggestion out there, whether you're looking to possibly get out of the markets, or if you think you want to stay in and see what happens here because it's going to be good long term. However, if you never sell, you don't get taxed on it. So if you don't have to sell, like why, if you have like a 10-year outlook, why do it anyway? Because you're going to just be selling yourself short getting out of the markets if the markets are going to increase, which they usually do on average year after year. So I don't know. That's everything for today. Leave a comment below. Let me know what you think. Like this video if you get a chance, and I'll be putting out more stuff like this weekly every Thursday. So check this out and stay tuned. Guys, subscribe if you have not done so already, and please don't forget to hit the like button and follow me on Instagram if you're on there. Thanks so much. Oh, and don't forget to check out below. You get 2 free stocks if you join, actually no, 1 free stock if you join Robinhood, and then the links for Coinbase and BlockFi. You can get up to $250 on BlockFi for depositing. some money on there, which you can earn interest on your Bitcoin, which I would really suggest to check out because I've heard nothing but good things from the company, and I also invest there as well. So guys, thank you so much for tuning in. Have a great day and a great week, and I'll see you next week.